I'm now joined by our next guest, David Bloom, Head of Forex Strategy at HSBC Treasury and Capital Markets. A very good evening to you, sir. Very interesting. Your latest Currency Weekly, actually, that was on the 23rd of November, said, should we fear a double dipper now? Have you been confirmed by those fears now?
Well, we were very concerned even before this happened. We had problems in Greece with the banking system. We had the West LB story. Just the news was piling on top of each other, which was very, very poor. We had the big rights issues in the UK. The news was turning a bit nasty. And a month ago, there was only good news. And now suddenly there's only bad news. And I think Dubai just came at the wrong time when bad news was piling on top of each other. And, of course, the markets were closed. There's no other story out there. And so maybe it's been a bit blown out of proportion. And so we were quite concerned before it. But what you really need for the double dipper is the US numbers to turn nasty. And they didn't. And that's why I don't think this downturn that we're seeing at the moment has legs.
Still, what does all this mean, the Dubai factor for Forex flows into emerging markets? They've been enormously, they've pumped up liquidity across the emerging markets. We had lots of talk about worries about asset bubbles. What's going to happen next?
Yeah, but I mean, if we are in an asset bubble, we're in the beginning of one, not towards the end of one. And obviously things have deflated a long way. So I think the asset bubble is still building up quite aggressively. And the question isn't the involvement in Dubai, it's the contagion. And I don't think it's got the contagion quite yet that it would have sometime in the future. So I'm still very bullish on emerging markets. And because the US numbers didn't turn nasty, I mean, they could this coming Friday. But until that happens, we're not facing a double dipper and not facing a proper setback in the markets.
And what about the carry trade? We've seen commodity currencies hit, we've seen the Aussie and the Kiwi hit. Will investors step back for a few days and then bounce back?
Well, I think it's not the end of the world. I think it's the end of the year. Quite frankly, I think this is it. I think when 3-month money went negative in the US, it told you, usually at the turn of the year, we see a spike higher in interest rates because there's a massive demand for cash balances come the end of the year. This time, we've seen 3-month money go negative. That told me investors aren't interested. They've got plenty of cash and they just want to nail the door shut on this year. And we're just wishing time away now in financial markets. This is the big move, and then I think nothing. It's going to be the doldrums until the end of the year.
Also, a word on intervention, because we had some chatter about the Swiss moving into the market when the franc moved to parity. And we also had some chatter around the Japanese very closely watching that yen-dollar level.
Yes, I think the Swiss story was a stronger one, and it was also part of one of those other reasons that I was talking about, that things just turned a little bit sour from the idea of pulling away from QE to getting more into it. We had Vietnam depreciating their currency and raising rates. So very strange things going on at the moment. But I wouldn't be too concerned. I think we've got to start thinking about next year. If you've got loads of profits or you've done very well, I think you just want to lock everything in. And the Japanese are always watching the currency rate, but they've moved away from it. I think for the first time since I've been in financial markets, the yen's at true levels. In other words, it's intervention-free currency hitting the levels it should be at, and that's actually quite healthy for financial markets.
And last but not least, we've been talking before the break about the mission, Jean-Claude Trichet's mission in China. What can he tell the Chinese that the Americans already haven't told them?
Yeah, I think it's the same repetition the whole time. People go to China and think something dramatic is going to happen. Bit of deja vu, I call it. But nothing much. I mean, the Chinese will let the currency appreciate from roughly the second quarter of next year in their own sweet time. And so I don't think much, except the frustrations of the Europeans, will come through. I don't think the Chinese will do much at all. Don't get too excited about the situation.
But they have acknowledged that they will have to shift somehow, somewhere, at some stage. When is that actually going to happen?
Well, I think the yuan is one of the easiest currencies in the world. And the reason is most currencies, you've got to guess the direction and the timing. With this one, you only have to get the timing. You know the direction. And I think it's more of a 2010 story, second half of next year, where the renminbi will start appreciating nice and slowly, maybe 2% a quarter. So this one, you don't need your tin hats for.
Last but not least, next stop for euro-dollar?
I think 150. I've had the forecast since December last year, and it's the first time in living history I may get a forecast right with a year in advance. I'm absolutely delighted.
Excellent. Thank you so much. Have a great weekend. David Bloom there, Global Head of Forex Strategy at HSBC.